Good evening again. This is not a false start now. Please stand for the national anthem. Please be seated. President, officers, directors, past presidents, and members of BIBA, our sponsors of this evening's panel discussion, Brookfield Bank, represented here by Mr. Greg McConney, and all of our other sponsors of the International Business Week 2019, our esteemed moderator and panelists, our strategic partners, specially invited guests, our audience here in this auditorium and online, members of the media, ladies and gentlemen. I'm Henderson Holmes, the Executive Director of the Barbados International Business Association, BIBA, and I say it with great sincerity, I mean it with great sincerity when I say to you that it is an honor and a pleasure for me to welcome you here this evening to this panel discussion. I say that because International Business Week is about sharing information and knowledge exchange, and we're grateful to you for coming, being our audience, and giving us a chance to share with you this evening. There's not going to be much more from me. We want to spend the time with the panelists, and not with a lot of talk, but there's room for some formalities and need for some formalities. So I'm now going to ask the chair of the International Business Week Steering Committee for this year, our first vice president, Mr. Derek Cummins, to come and deliver some welcome remarks. Derek.
Thank you, Hendy. Just take a moment and observe all of you. I'd like to see who I'm talking to. Good. So Hendy's done a fantastic job welcoming all of you and noting all that must be noted, that has to be noted, so I won't do that again. Tonight's topic engages generations, vendors, buyers, business, academics, innovators, regulators, farmers, doctors, homemakers, researchers, educators, students, and we go on. Money, it has been said, is the blood of the economy, cycling to us all, fueling all of our activities. As such, access is critical. Ease of access, speed of access, velocity of flow, all critical. We have long time held this asset in the form of cash, in our wallets, in our pockets, under our mattresses, our bank accounts. And yes, banks have been innovative, allowing us access and use of our money. The cards you now hold in your same wallets allow point of sale and online trade. Your online account allows you timely execution and settlement of many transactions worldwide. But there is a future upon us, a future built on immediacy, efficiency, and downward adjusted pricing points. John Maynard Keynes, the great British economist, in his 1935 publication, The General Theory of Employment, Interest, and Money, said, "For the importance of money essentially flows from its being a link between the present and the future. This future that is now then requires a money that serves that future, that flows unencumbered from point to point through tried and tested arteries, but also through new arteries." The universe of payment systems is rapidly evolving. Innovators are introducing new ideas and technologies at a great pace. There are promises of stability. The report, however, noted 9 major risks with such currencies. Comes to trust, the tagline in our topic tonight. As users of financial services, we have all trusted. We've trusted providers to promote only safe products. We've trusted mortgage companies to help us secure ownership. We've trusted investment managers to partner on our dreams. We've trusted regulators to watch over the providers of goods and services and keep us safe. We've trusted systems and technologies to be secure and robust. We've trusted great men and women to act ethically. Even recent history is rife with great betrayal of that trust. With that, people tend then to be cautious and even apprehensive. In his same book, John Maynard Keynes also said, though, and I quote in closing, "The difficulty lies not in the new ideas, but in escaping from the old ones." I am looking forward to a robust discussion, and you're all invited to join in with our panel. Do enjoy the evening.
Thank you very much, Derek, for those brief remarks. By the way, I believe you all have one of these, probably a little more sophisticated than mine. But if you haven't done so yet, please put it on either vibrate or silent. Thank you. We're going to move swiftly along, and we're going to have a word from our sponsor for this evening, Mr. Greg McConney. Brief words.
Evening, everyone. We'll be brief, promise. Ladies and gentlemen, it's very pleasing for Brookfield to once again support BIBA, and particularly International Business Week, through sponsorship of this event. I just want to share a little bit about Brookfield and our interest in this area. Brookfield Asset Management is a Toronto-based global alternative asset manager, and it's traded on the New York and the Toronto stock exchanges. Assets under management exceed $500 billion US, and with a 120-year-old history of owning and operating assets in the real estate, renewable power, infrastructure, and industrial and business service spaces, Brookfield has operations in over 30 countries around the world. And as as a group, we're very interested in operational efficiencies and new technologies that can bring those efficiencies to business. In 2017, Brookfield launched truckers have been able to increase their earnings on an individual basis between 20 and 50%, and the number of containers that get hauled per truck has increased 167% using this platform to be able to efficiently match the cargo with the truck or the driver and the capacity there. On the real estate side, they've invested in an entity called Latch, which provides smart access systems it'll let residents of buildings, the owners or the operators of those, focus on the multifamily apartment buildings, use a smartphone, key card, door codes, in order to grant access to their apartment unit and the various amenities surrounding that apartment. So users can grant temporary access, like if you have cleaners coming in or deliveries and so on, you can electronically provide time-limited access to apartments. So these are technologies which increase efficiency significantly, both on a personal level and at a business level. And you know, we've seen, at a personal level, I've seen the benefits of online banking, you know, being able to settle your bills and so on. And more recently, just like mobile phone top-up, I've had the pleasure of using the Bitt app to now directly top up my kid's mobile phone. Before, I'd be having to, you know, Dad, I'm out of credit. I got to run to the gas station or a retail store to do the top-up. Now is literally pull up an app and bang, you know, credit instantly gone onto their phone, which saves me time and is just a whole lot more efficient. So we're, I think at a local level, the day when more services in Barbados can be accessed using technology tools really can't come too soon, as we desperately do need an improvement in the ease with which business can be conducted here. And I think payment tools are definitely a significant aspect to that, especially certain interactions with some public entities. But so I'm really looking forward to the discussion that we're going to have, and I want to just, on behalf of the sponsors, thank our panelists and moderator for taking the time to come and share your perspectives on this topic with us. Thank you very much.
Thank you, Greg. Thank you for those brief remarks, and thank you and Brookfield for your support for this this evening's event. At this point, I'm going to invite the moderator and panelists to take their positions here. And while they do so, let me tell you what's going to happen now. Before we get into discussion, I am going to just introduce the moderator, and I will leave it to the moderator to introduce his panelists and proceed with the discussion without further interruption from me or anyone else. Except you, of course. You're free to ask questions. Our moderator this evening is Mr. Winston Moore, Dr. Winston Moore. Our panelists are Runako Brathwaite, Marla Dukharan, Esan Peters, and Allison Browne-Ellis. As I said, I'll introduce our moderator. Our moderator, Professor Winston Moore is presently a professor of economics and the director, School of Graduate Studies and Research, and he teaches in the Department of Economics. Prior to this, he held the position of senior economist at the Central Bank of Barbados. Professor Moore is a very active public commentator on issues related to national development and is a former president of the Barbados Economic Society. His recent research has examined the issues surrounding the green economy, private sector development, as well as the economic impact of climate change on tourism. Professor Moore has published more than 90 peer-reviewed papers, books, and book chapters. He holds a PhD in economics from the University of Surrey, an MSc in economics from the University of Warwick, and a Bachelor of Science in economics from the University of the West Indies, Cave Hill campus. Ladies and gentlemen, our moderator, Professor Winston Moore, and his panelists.
Thanks a lot. I think there's one really important story that Hendy left out there. So when my wife asked me what we should name our daughter, she said she will choose one name and I'll choose another name as well. So I went to her and told her, let's choose Christina. And she had no idea why I chose Christina. She just, when she looked it up, you know, it had some Christian connotations as well. But Christina also is the name of Christina Romer, who is a famous economist who has done lots of research on money. So I think that also qualifies me to sit as the moderator for the panel as well. Commitment is what I call that. So thanks a lot, Hendy, for the introduction. What I'm going to do first is carry back a little bit to my days as a lecturer in monetary economics. Monetary economics is actually one of the first courses I taught as a lecturer at the University of West Indies. I didn't like it that much, but, but I had no choice. I've since come to really appreciate it a lot. And I've done a fair bit of research looking at the area of money and finance in the small and open economies. The mic is gone, so I'll go into my lecturer voice. The issue of money is actually one of those things that is quite important. Historically, money has been defined as anything that facilitates exchange and acts as a common unit of value. So maybe, for example, gold, pieces of silver, common units of value that people accept. Human beings, as soon as they climb down from trees, this one is a little bit controversial, but I had it in my lecture notes. It would seem they started to use money. The oldest coin discovered is actually more than 2,700 years old, and that was made up of a combination of gold and silver. For an asset to be considered money, it must be generally or widely acceptable directly in exchange for goods and services, not merely be acceptable in an occasional private transaction. Thus, money is a subset of all those assets that might be acceptable in exchange. So in the past, persons have used many things as assets. Even, for example, here in Barbados, we've used sugar as a means of exchange and as a form of money in the past as well. The traditional definitions of money vary quite widely. I'm just going to give you a little bit of history here. So you have this concept called narrow money. And a very narrow definition of money would be what we're holding in our wallets at this point in time. So cash and coins, that would be your narrow definition of money. The broader definition of money gets quite wide. So you can include your mutual fund accounts, your long-term savings accounts. All those things can actually be considered in terms of broad money. So you have your narrow definition of money and your broad definition of money. Now, tonight's discussion looks at an even broader definition of money to look at the issue of digital currencies. And I have an excellent panel here tonight to look at this issue, and I'm just going to introduce them each one at a time. They've sat in an order that is different from my notes. So thank you very much for that. So let's see here. Allison Browne-Ellis is currently the director of the Cave Shepherd and Company Limited, with responsibility for for the Cape Shepherd Card Unit. In her capacity, Allison has responsibility for strategic planning and execution of growth strategies for the Cape Shepherd Card portfolio. Allison has successfully led her company to acquire the status of the first non-financial institution in the Latin American Caribbean to obtain a principal membership license with Visa Inc., resulted in the issuance of the first locally owned and managed credit card product and mobile app payment system solution in Barbados. Esan Peters was appointed Chief Information Officer and Managing Director and Technology and Operations, CIBC FirstCaribbean, with effect from February 2018. In his current role, he's the executive responsible for providing technology and operations services in support of the retail, corporate, and wealth management businesses of the bank, as well as supporting the various support functions, risk, finance, treasury, HR, and administration. Esan Peters. Mr. Runako Morton is, sorry, I think I have the wrong name here. Runako Brathwaite, sorry, my apologies. Not sure where he got that from. That is such a strange name. I've never heard that before. Runako Brathwaite is a seasoned regulator, highly adept at scrutinizing the risk management framework of financial institutions with 15 years experience. He has a reputation for meticulous oversight, and in his current role as senior examiner with the Central Bank of Barbados, assists in the development of policies and regulations for the financial system. His research interests include fintech, regulatory policy, and payment systems. In his published research, he's examined the use of digital currencies as a form of payment in Barbados, and he's passionate about revolutionary technologies that have the potential to transform the financial services industry. Runako. I don't think I need to introduce the next speaker, but I'll still introduce her nonetheless. Ms. Marla Dukharan brings 20 years experience as an economist in the Caribbean financial services sector to Bitt and is regarded internationally as a chief point of reference on regional economic issues. Her resolve to play an active role in supporting solutions to the Caribbean's economic and social challenges has led her to join Bitt in 2017. And at Bitt, Marla contributes to the adoption of technologies in the Caribbean that boost financial and economic inclusion and lower the cost of financial services, enabling the region to transcend the constraints of traditional business and banking channels. Marla. So what I'm going to do is ask each presenter to give a couple opening remarks, and then we'll get into a bit of discussion on the topic. So Marla, can you start the discussion? Yes, first. You're right beside me, so you have to start. Do you want to move from beside me?
Thank you. Oh, right. I forgot. I'm not wearing a lapel. Is this working? Okay. Good evening, everyone, and thank you for having me. My apologies for being late. I was behind a very slow ZR. Anyway, you know Ralph Waldo Emerson. Anybody knows that name? I know we quoted John Maynard Keynes big time already here this evening. Ralph Waldo Emerson once said that money often costs too much. And I know that many of us, perhaps most of us in this room, probably don't think about what it means to be unbanked and what it means to not have access to financial services. But it is something that affects this region quite significantly. Some countries more than others, of course. And in order to solve the problem of poverty, you have to solve financial inclusion. And I actually feel like being able to store money and to transact cheaply, or I should say affordably and securely, should be, I think, a fundamental human right. Because unless you can do that, you really cannot lift yourself out of poverty if you are in poverty. And most of the people affected by this are women and, of course, their children. And so I just want to share a couple anecdotal stories that recently, for example, last week at the IMF meetings, one of the economists who's working on the whole research of fintech and the impact that it's having developmentally all over the world, one of the things she was saying was that banking services generally have, as was discussed earlier, there has been innovation over the years, and services generally have become more affordable, and many people can access these services. However, there is a huge proportion of some countries' populations that can't. And so she talked about the example of India. And she drew the analogy from the fact that you had this quandary in India where people did not have the means to afford shampoo. Because a bottle of shampoo was, let's just say, $5 US, which is like half of what people would earn in a month. And so she talked about the fact that the innovation that came from that sector was something called sachetization. They made sachets out of shampoo, out of lotion, out of most toiletries in small packets that people could afford, and lo and behold, people were now accessing these products almost universally. So she likened that development, that innovation, to what fintech has done to the financial services sector. And via the use of a central bank issued digital currency, the fact that people can be financially included, have access to financial services in a manner that is secure and affordable, much like the sachets of shampoo that developed in India based on the need of the people. And that's the thing about innovation. It is responsive to the need of the people, but as my colleague Runako here will talk about later, you know, the role of the regulator and the authorities is to make sure that this innovation is not a threat to the consumer and is not a threat to the wider financial system or whatever system we're discussing. Another innovation, another mechanism via which fintech has made a big difference is in Kenya. The central bank governor was talking again at the IMF meetings about the fact that what they were able to do through this rollout of M-Pesa in Kenya was that they were able to monitor the effects of monetary policy in real time. So they could see, and they were able, because of the nature of the digital currency they use there, they can see the movement of this currency in the economy. And he said they noticed that at 3 o'clock in the morning, there was this high level of usage of M-Pesa and of the currency. And so they were wondering what's happening at 3 o'clock in the morning. And so they did this investigation to figure out what was happening. And what they found was not any nefarious activity. What they found was that women were waking up at 3 o'clock in the morning, using their mobile phone to place an order with farmers for agricultural produce that then had to be delivered to their market stall. And they do this at 3 o'clock in the morning, send the money so that the farmer sends the goods with the transport. And he says, you know, by 5 o'clock in the morning, you know, all their goods are delivered and he hasn't even woken up yet. And so there was a thriving business that they weren't even aware of, and not just that the business was thriving, the business for many of these women actually grew, because they now had access to a mechanism to pay farmers remotely, digitally, without having to physically go there, and it was cheap and it was secure. And so the point I'm making from all of this is that once the regulator can make sure that the innovation that is taking place is not a threat and is not dangerous to the user, it is sometimes you're not even aware of the benefits that you can see from this innovation, because you put this technology and this solution in the hands of people who have not had it And the things they might do with it, you cannot even fathom. This is what the governor of the Central Bank of Kenya was saying. And so what I want to leave you with is that the authorities and the regulator more specifically has an important role in making sure that the environment is set to embrace innovation in a manner that is not threatening to the individual or to the system, and to ensure that there's a level playing field. And that is where the trust comes from. And we're here to talk about trust, and that digital currency depends on that trust. Just as you would trust the dollar note or the coin that the central bank issues, if the central bank issues a digital currency, it certainly carries the same legal status in terms of being legal tender, but it should also carry with it the same level of trust. Thank you.
Great. Thanks a lot. Now, Allison Cave-Shepherd is doing some really interesting work in this area as well. Can you maybe give us a few remarks on that?
Thank you, Professor Moore. Good evening, ladies and gentlemen. First off, I want to thank BIBA for inviting me to participate in the panel discussion. And from a Cave-Shepherd perspective, what I would say to you is that we have been one of the disruptors, along with money, within the market in recent times. And the experience has been an interesting one, but we've come to the conclusion that the future of payments is here, and it's digital, and we're here to stay, and we're here to continue to propel the transition into a digital society. So from a Cave-Shepherd perspective, our product is actually it is a mobile app that allows you to make payments, collect payments, I should say, from your customers via the mobile phone. It's all tied to the Cave-Shepherd card product, but it goes a little further because it also allows persons to send and receive funds, which is a different dynamics to what you would be used to in a traditional point of sale terminal. So, you know, we talk about the product in its current form, but there's so much happening in the digital space that Cave-Shepherd has been monitoring for a while. We have the Amazon Pay, we have the Apple Pay, we have, if you go a little further to Amazon, just created these Amazon Go shops where you could literally walk in and check out without even considering, not even just cash nor card, you don't have to think about, and it's using advanced technologies. But all of this comes from our perspective, all of this comes with a commitment to moving in a digital, in that space, and creating a currency that allows for other persons, as Marla said, to get involved, where you are now creating an infrastructure where persons are that never thought of, you know, having the payment system to actually now function here locally, micro and small businesses, through their mobile phones. So there literally no consideration to infrastructure for point of sale, no consideration for the excess fees that they would have normally kind of shied away from with the financial institutions. They're now looking at a product that's more affordable, fits within their overall business model, and they're willing to accept and go outside of the norm. What I would say to you just from our experience is that requires that comes with a change in mindset. And that is where I think the trust issue is coming. I think that there are a couple of things we've learned, especially from my perspective. And I'll just kind of name 4 of them. One, the product has to work. So you have to be bringing to market a product that works, because customers are not going to be keen to follow through. They may try it the first time, but they may not take it a little further if it is not a product that works and works well. The other thing that is really interesting is the level of education and awareness that you have to build around the product, because it's different. We are not early adopters in this country. If we think of the ATM experience years ago, where literally, you know, the banks probably introduced the ATMs assuming that people would naturally just start going to the ATM and leave the tellers, and that was not the case. I was in banking then, and literally there was you had to keep refining the strategy to start to get people to transition out of the banks. The third thing is collaboration, and I think this is where Marla was going in terms of making sure that all of there's inclusivity in terms of the regulators have a platform that allows for that. And then the final thing would be government's role. And those are some of the things that come to mind immediately when we talk about moving in the digital space. Yes, we've done some work there, and there's a lot more that we're committed to doing in that space, but it is a trust issue, and we feel very strongly about making sure that we are doing our part to build the awareness that's necessary.
Great. Now, Esan, you're sitting beside two disruptors, and you're representing traditional commercial banking. How is traditional commercial banking dealing with this issue of digital currency?
Okay. All right, so let's take a step back. You kind of painted the picture of the history of money.
Okay.
So really and truly what the commercial banks are looking at is the future of money and where's money going. Banks want to offer services to our clients that are faster, safer, cheaper. It doesn't profit us to have inefficiency in our banking transactions. So if we see disruptors coming into the marketplace and innovating, then we want to work with those innovators because it helps get inefficiency out of the ecosystem. The future of money and where it's going in terms of the whole digitization and how the environment is changing, money obviously has to change. But I will, and as we go through, I'll challenge some of the thinking of how do we get there, and is it straight to the digital currency? So you'd have heard Allison mention what she's doing with the K Shepherd card. We in the banks have obviously got online and mobile offerings that you can use almost like a wallet to transact with. So the question is, if you're able to use mobile and online today without a digital currency, is there always a need for a digital currency? I think that digitizing a currency is, and I'll defer to the Economist, is going to be a very challenging thing to do because there are a lot of factors outside of the technology that we will need to consider. So as we look at it, we have looked at models like the model in Sweden, for example, where they're going to a cashless society, but they have not come up with an e-kroner as yet. They are looking at it, but they haven't actually come up with a digital currency. So we see as the innovators come into the market, we the banks see it as there is a pathway or a journey that we're on, and eventually there will be a digital currency, but we'll have to be very, and I speak on behalf of the banks, we consider risk in everything we do. So it's the risk of what does that introduce, going to a digital currency, what does that introduce into our ecosystem, and how do we ensure the same financial inclusion works? Because digitization assumes that everybody has got some kind of digital device to be able to access that ecosystem. So on the one hand, inclusion is great if you have access. The other thing obviously is security and safety. How can we ensure that there are no persons trying with malintent actors trying to get into that ecosystem, and obviously look at defrauding it. And finally, we have to look at stability, because when you have a financial system that is now digital, what does that mean? Does the central bank hold the deposits? Then how do the commercial banks lend? So it's all an ecosystem that we have to consider, and I speak next to the innovators. We are more careful as we make that journey, that we consider all of the factors and the risks involved in getting to that end state.
Okay, great. Now, Runako, what is your perspective as the regulator? Is it stop, 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 or is it let's innovate as quickly as possible? What's your perspective?
Before I start, as probably the safest person up here, I should start with a disclaimer that the Central Bank of Barbados has not yet issued a formal position on digital currencies, so my comments here tonight are not those of the Central Bank. So when I think about money without cash, I think alternative forms of payment. You have the M-Money, we have credit cards, we have K Shepherd credit card, and now we have this concept of digital fiat. When you talk about payments, there's already some established regulatory practices and standards, such as the Principles of Financial Market Infrastructures, which have the objective of, the safe and efficient design and operation of payment systems. But when you talk about digital fiat now, this is a new concept. So central banks around the world, and as Esan would have mentioned, Central Bank of Sweden, all of us are starting to do our research in this digital fiat. We're starting by trying to understand the risk of the underlying technologies that will be used to issue digital fiat. And as the regulator, of course, it's critical to understand these risks. You have risks like data privacy, you have cybersecurity, you have fraud, you have consumer protection. There are lots of risks when you talk about issuing a digital fiat. And lost my train of thought, sorry. Right.
It happens to us as we get older. It's okay.
Right, so with the digital fiat, we need to be very careful to understand how these risks could impact financial stability. So as the regulator, we need to ensure that it doesn't destabilize the economy. So one of the things that we need to do first and foremost is understand these risks and ensure that we not only assess the potential benefits, but look at these risks to make sure we do not disrupt the financial system, as Marla was saying. And I think that going forward, even though it's likely that digital fiat will be the next evolution of money, I think it is going to be dependent on the attractiveness of alternative forms of payment, and also is going to be dependent on the demand from the public. That's it.
I want to get into some sort of like basic level issues here. Now, when I have cash, I can put it underneath my bed and I can store it there. And it's assets because if I want to draw on that cash in the future, I could just lift up my mattress and spend that money in the future. Is digital currency an asset? Should we consider it an asset?
May I?
Sure.
Yeah, if it's a central bank issued digital currency, it's the same as that money you have under your mattress. It's just in a different form. As a matter of fact, right now we use electronic money, which is what you would use, as you mentioned, Esan, when you use your online banking, when you use your app. Now, the difference between, and your question was, why a digital currency if we already have electronic money and people can already use online banking and a mobile app? The thing is, those are people who are already banked. And the problem, or I should say the challenge that we are looking to resolve with digital currency is to reach those who are unbanked. And with a digital currency on a mobile app, you have the potential to reach and bank people who the banking system has not captured. And so that's one of the key distinctions in terms of the user, the impact on the user, the distinctions between electronic money and digital currency. But to answer your question, is it an asset? If it's issued by the central bank, it's legal tender, it's just the same as the money you have under your mattress. You shouldn't have it under your mattress. You really shouldn't. Now, yeah, what?
I just won't tell people my address.
What Bitt has issued here in Barbados is, according to the IMF's definition, it's a synthetic central bank digital currency. In other words, it's a representation of the currency that is issued by the central bank, and it's backed 101% by the currency that is issued by the central bank, sitting in a vault. We wouldn't give the address. And audited and regulated by the FSC and the central bank as well, and supervised, I should say, not regulated. And so that's synthetic CBDC, according to the IMF, or some people call it a stable coin. That is also an asset, simply because it's a digital representation of an asset, which is a physical note sitting in a vault. So if you digitize that money under your mattress, and it was in digital form on your phone, it's a representation of the asset that you have under your mattress. So it is an asset.
All right. So you mentioned this idea of a central bank digital currency. Now, Allison is doing something a little bit different, and lots of large institutions across the world, non-financial institutions across the world, are getting into the payment mechanisms. So you have Apple actually allowing you to make payments now via your phone. If you travel to China, there are lots of payment apps on your mobile phone as well. Why should we have a central bank digital currency? Why not just go with the model that Allison is proposing with her Cape Shepherd card?
That sounds like a question for the Economist.
No, I'm pointing at you, actually, Allison.
What I would say is that the Cape Shepherd Card mobile app was born out of the need to provide customers with alternate options and therefore giving them power of choice. And the power of choice essentially says that you could either withdraw your funds from the bank to do what you need to do, or you could use the Cape Shepherd Card mobile app, which taps into an account where we facilitate credit on your behalf. The real advantage there is, one, you're using someone else's money in our scenario, obviously with the expectation that you pay it back, but also then allowing small business, micro and small businesses who would not normally qualify within the financial services sector for loans and other facilities that they would need to be able to manage their business. So it really was born out of the need, one, because digital is the way to go, but also that we are able to provide that alternate option within the market today.
And Esan, do you think that these type of technologies would basically make traditional commercial banking irrelevant?
I don't think so. Okay, so we're talking about payment systems. At the end of the day, as Allison mentioned, in her particular scenario, you're using credit. So where are you going to get the money from to satisfy that liability? The bank. So banks will not become obsolete in this system. There has to be some kind of bank offering that intermediation between the depositors and the lenders. So those deposits have to sit somewhere, and that's the function that the banks provide. What the banks are doing is obviously we are innovating as well. So I mentioned mobile apps, mobile wallets, all of those kinds of things we're putting into the marketplace. The other thing that I should mention is that we are looking at improvements in our payment rails to ensure that we can offer that real-time payment experience. To give you an example, in the region now, so I'll use a regional example. In Aruba, for example, we are looking at a real-time payment network amongst the banks in Aruba and the central bank, which will ensure that within seconds I can send money to you and you receive it. You can then pay merchants, all without as yet a digital currency, but all just using payment networks. So still showing that the banks are relevant. So I think it speaks volumes to Allison and the team around innovation, but I think that innovation, once one innovates, it catches up. So eventually you will see that evolution of the things that one innovator start will catch on. It's not innovative tomorrow.
We've seen a number of large global financial corporations developing their own digital currencies. And this is a public discussion for International Business Association. What do you see as the benefits for international businesses of this concept of digital currency?
That's a tough one. I might have to throw this over to the rest of the panel. I'll take a crack at it first. And I don't think we're going to be violating copyright if we talk about one of these, for example. So Libra, which was announced by Facebook and a consortium, looking at introducing a digital currency to foster cross-border and I guess some domestic transactions as well. Digital currencies, it comes back, when it's a sovereign digital currency, there is control. The thing with the Libras and the Bitcoins and other things are there's decentralization, and it's a question of where is the control in a regime or mechanism like that. And then the concern then becomes around volatility and trust. So you can have speculation just driving the price of stuff up because it isn't backed by anything. In the case of Facebook, they're looking at a basket of currencies, but these are currencies across the various central banks, and the central banks, as far as I'm aware, have not signed on to that concept that they are supportive of this thing. So most of the G7 has said they want to examine what they're suggesting there. And what I would add at the end is, the last I heard is that quite a number of the consortium have withdrawn the Visa, the MasterCards, etc. And I think they withdrew, this is only my opinion, because the US regulators asked Visa, MasterCard, PayPal, what is your AML KYC regime around doing this? And almost simultaneously might be a little thing, they withdrew. Because those kinds of questions have not been answered, and regulators, we need confidence that this will work. And it comes back to the idea of trust. And is there trust when you try to do something that large? I think eventually we will get to something like that, but it will require participation by the governments, the regulators, the banks, because in that consortium, there's no bank at the moment. It's Facebook, Uber. So those unregulated entities are trying to start a digital currency, and there's concern that what will this mean for sovereigns?
If I may, sorry? Okay.
Oh, speak up.
Is this okay? Oh, the gentleman. Okay, thank you. So yeah, you're right. You know, you have Facebook coming out with this Libra coin, and then JP Morgan had announced that they wanted to do theirs. Theirs hasn't been launched yet, apparently. The last I heard was that they were going through some legal and regulatory hurdles. Now, what does it tell us that these entities have expressed an interest in doing this? It hasn't yet come to fruition, but what does it tell us that they plan to do it? It means that somewhere there is friction in the system, there's something that isn't quite working, and they would like to find a solution to get around it. That's what it's telling us. I believe, in the end, we will end up at central bank digital currency, where the central bank itself issues its own digital currency, much like what we are doing for the Eastern Caribbean Central Bank, much like what China has indicated they are doing. And that will help to get around the challenges that these private entities have appeared to try to resolve on their own. And you're right, no central bank would like to see the control of the payment space and the currencies movements not having that control. And so if there is an easy alternative, well, not easy, but it is an alternative to issue their own digital currency and pretty much solve that problem, then why not do it themselves? And I feel that's where we're going, where central banks will themselves issue it. Now, with respect to who and when, Sweden, for example, as you highlighted, Esan, they're already the most cashless society on earth. Probably a digital currency is not going to be of much use to them because they're already cashless. But what about a society like Haiti? What about many developing countries where people rely on cash? It's not secure. There are all kinds of risks related to cash, right? Yes, there are risks related to digital currency, but let's not forget about the risks related to the traditional cash and even the risks that we face in using the banking system. I personally, while I was working at the bank, have had my bank credit card compromised. I have had close family members, my sister-in-law and my parents, had their card duplicated, skimmed at the ATMs. Now, this is Trinidad, okay, so not Barbados, right? So there are risks in all of these systems, in traditional cash, in existing banking system, and of course, in the digital currency space, there will be risks as well. You have to determine what these risks are, and you have to build a solution that mitigates the risks. Now, I go back to this point of Sweden. I think they are probably not going to see huge benefits from a digital currency, but a society where there is high cash usage, where there are, of course, inherent risks related to that high cash usage, where financial inclusion is low because people can't afford to be financially included, or the banking system, let's face it, sometimes they're just not interested in certain clients. these are the societies, I think, that would be the ones to adopt a digital currency first. So, for example, in the Eastern Caribbean, the governor of the central bank articulated, I think it was a year or two ago, that they want to reduce cash usage by 50% in the Eastern Caribbean because cash usage is too high. It's expensive to move cash around all of these little islands in the Eastern Caribbean, and there are lots of frictions associated with that. We were in Montserrat about a year ago. You can sit in Montserrat and you can see Antigua, and the head of the Chamber of Commerce there told us that sometimes it takes 2 days when she's trying to send money to her supplier in Antigua to get her goods. It takes 2 days for them to receive the same currency, EC dollars, and you could actually see Antigua from Montserrat. And so what they do is they go down to the port, the ferry, give it to somebody. In a society of 5,000 people, you must know somebody who's getting on the ferry to Antigua. You give them an envelope and say, could you give this to so-and-so? And that's how today, in 2019, transactions are conducted between Montserrat and Antigua, its closest neighbor, in EC dollars, right? We're not even talking about traditional cross-border payments here using different currencies. We're talking about EC dollars. And so they have a problem that they had to solve, and digital currency was the way that they thought might be the best way to solve that. And so I feel like this is an evolution that will perhaps be led by developing countries.
Do you think, though, is there a cost that would stop us from adopting digital currencies any faster?
I'm not sure.
In terms of, for example, the money platform is a good example that we might consider. So to have money across your particular country, you have to have the terminal set up, and individuals have to have a mobile device or something like that.
Well, I disagree. I actually feel like once a central bank issues a digital currency, and it's made to be interoperable with the existing financial system, the existing players, and they can then use the digital currency, as well as any new service providers who can be licensed and make their system interoperable with the central bank's digital currency, then we don't have a problem, and then everybody is able to participate, and all clients will be served better.
So, Runako, have you sort of looked at any of this from the perspective of the regulator? How do you manage this sort of system with a central bank digital currency?
Well, I think, as Marla said, this effort will be led by the developing countries, but what we in the region have done, there are working groups around among the Caribbean central banks, and we also have our own internal working group, which is looking at the digital currencies, looking at the potential benefits for society, looking at the risk, because we must address the risk. And I think that it has to be a collaborative effort. We in the central bank, in the region, we are small. We don't have the funds, and we have the limited expertise. So we need to not only draw on that experience from the developing nations, but leverage ourselves among the region.
Great. I want to get the audience involved, so hopefully the microphones are around somewhere or the audience. So can we get the microphones set up? And while we're waiting on the microphones to be set up, I want to maybe, I don't want to make the discussion too technical, but one of the issues with the digital currencies that have been occurring so far, so for example, the Cape Shepherd card is a good illustration where you have these sort of private sector initiatives taking place. They, to some extent, reduce the ability of the central bank to control the money supply, and therefore the ability of the central bank to engage in monetary policy, because essentially what Cape Shepherd is doing is issuing some type of money supply into the financial system. Marla, what do you think about the potential impact of digital currencies on the? I know you're sort of speaking for the goal of central bank issued digital currency, but until we get there, when we have these sort of private sector initiatives that are essentially issuing their own currency, what do you think would be the impact on the ability of the central bank to control
on
monetary policy?
effectiveness? I mean, from Bitt's perspective, we do not add or take away from the money supply simply because we back each digital Barbados dollar on the M-Money network by physical notes and coins sitting in a vault. So there is no impact on the money supply and therefore no impact on monetary policy. I can speak to our solution. I really can't speak to what the situation was with the Cape Shepherd solution. But I will say to you, with a central bank issued digital currency, the central bank has unsurpassed capability to see real time, immediately, what the impact of its monetary policy is, whether it's with respect to money supply or with respect to interest rates. And that evidence is clear in countries that have issued, like the M-Pesa example I gave you, but others as well.
Okay, great. So we had a question in the audience. Can you take?
Hi, good evening. Ian Bourne from CETA Radio and Beijing Reporter. I do have a question for the entire panel, but I have two quick comments. One, Haiti was mentioned and about digital money. They do have a system, but I don't know how far it has gone. It was called Chocho. Right. Yeah. I think it was created by Digicel. And also on a personal level, I can use my Scotiabank app and pay my Cape Shepherd card. And also because of the fact that I have a website which is about writing, I get overseas offers and they pay me by a PayPal. So the PayPal payments go to the Cape Shepherd card. That's just a comment about the convenience of digitization. The question I have, it relates to two commercials from the United States. Both had the same thing. One was a couple that just got married, and their wedding gifts were checks. And the other commercial was a Chinese acrobat. He was paid in the form of a check. Both of them, or all three of them technically, took pictures of the checks using their cell phones, their smartphones. They sent it to a particular email address, and the fee was registered within like 5 to 15 minutes. I can't remember which bank it was. Therefore, my question to the panel is how close or how far is Barbados from that, and why?
That's for Esan.
Wow. So this is now getting into the area of trade secrets and what do we have in development. So I might take a pass at it, but I'll challenge you with a different question though, and I'll answer your question after. Your question is based on the assumption of you needed to deposit a check. Why do you need a check? So this whole conversation we've been having has been about digitizing payments. So the same way that person sent you a check, they could have sent you the cash. They should have initiated a transfer from whatever account to you. You mentioned PayPal. They don't send you a check. They do a transaction, and it's all electronic. So I think I would challenge the thinking that you have to go to doing a remote deposit capture of a check and deposit it into an account. I would say get rid of the check completely.
Marla spoke about Antigua and Montserrat.
Yeah.
So there are a lot of companies in Barbados that will pay a client via a check.
Right. You can send them to FirstCaribbean. But seriously though, within the region, and we'll use the EC as an example, I'm surprised that, and I think it comes back down to the conversation we've been having about education. Within the EC, we have one of the most advanced ACH systems in the world. It is fully truncated. You can do electronic funds transfer, and it is they're almost near real time. So within the EC, I can transact between Antigua, Dominica, whatever, and send that money along their ACH rails. The challenge is they're not using it. So we in the banks, for example, we would have people coming to us with spreadsheets of payments for us to key to pay an employee at another bank. And we're like, no, use our online portal and pay that person yourself. They will get the money today because the ACH system supports it. So I think there's a level of education and adoption that does not happen when It's almost like we build it and hope they will come. So, and my fear is that we move to digital currencies, that inclusion issue may arise as well. We will build it and hope they will come. So it is, I think, awareness, education, and Aruba, again, they got rid of checks. So they don't need to take a picture of a check and deposit it. They don't use checks.
Maybe the cost might have been prohibitive of using that clearing system in the EC. I'm not sure. I'm just asking.
No worries.
I think too, just to add, Esan, I think sometimes it comes down to just layman understanding of the products and services that we offer. And I think that that's something that we really need to take seriously as the stakeholders in this game in terms of moving to a digital society. We definitely have to do more education.
Any more questions? Yes, please. In terms of education, what do you think we need to enhance the greater adoption of digital currencies in the future?
I think that we all have our own story to tell, and we do a good job at that. I think that collectively we don't, in terms of telling the story so that people understand the vision and the journey for the country, and I think that that is where there may be an opportunity. I don't have the answer as to how you would collaborate in that space, because, I mean, within our own rights, we see ourselves as competitors, but I think that if we focus on the competitiveness, it then creates a negative image to the general public, and that's why there's a gray area in terms of trust.
Yes, please. Question.
Good night, everyone. First thing, I just wanted to commend and thank BIBA for putting on this very timely and important discussion. My first comment is more on the lines of an observation. The sense I get is that Europe seems to be a bit further along in the digital monetary continuum compared to North America. So that's one observation which may or may not be correct. I would ask the panel perhaps what their thoughts are in terms of where Barbados might be poised to go, if you think we might maybe move a bit more speedily towards digital money along the lines of Europe versus America, for example. And my second question is directed to Ms. Dukharan. I think you made a passing reference to the Eastern Caribbean Central Bank and the relation to digital money there. And I wasn't sure if you meant that perhaps they might be further along than we are in that regard. So I would ask Ms. Dukharan to perhaps elucidate more on that aspect. Thank you.
Thanks for your question. On your first question about, where is Barbados, and are they likely to follow Europe, or are they likely to follow North America? Why not leapfrog and bypass everything that they had to go through and go straight to, which is what the Eastern Caribbean is doing? Bitt has the first, and so far as I know, the only digital currency pilot, central bank issued digital currency pilot in the world, in the EC, which is a central bank digital currency to be issued on a blockchain. Uruguay had a pilot, and it ended, I think, maybe last year, and they decided not to go with a full deployment yet. And there were other countries that have indicated that China, for example, is issuing its own digital currency. But the Eastern Caribbean is embarking on a pilot. In the first quarter of next year, we expect to start testing it. And like I said, it's not necessary that you necessarily follow the development path of the European countries or the North American countries or any country. It is possible for you to leapfrog straight into a solution that makes sense for you and your scenario, which is what the Eastern Caribbean has done.
If I could just add to that, Marla, two things. One, in context to the leapfrogging, I think one of the things that, because we're a visa member, and that means that we get a lot of the studies and coming out of visa, and they do quite a bit of research. One of the things that I found very interesting this year in attending a visa conference that was quite different from the conference last year was that traditionally, you hear of the challenges within North America in terms of the merchants actually engaging and accepting, embracing the whole chip and pin, and so there was the resistance. North America was moving sluggishly, but then came contactless. And there was a complete transformation in North America. They are very into the whole contactless. They're now trying to play catch up with Europe. So that leapfrog, it didn't happen in terms of chip and pin because they didn't follow Europe at that time, but contactless came and they were very happy to have that. So that's one. And then the question around Europe in general in terms of what they have done, one of the interesting studies is around their transit system. And I think it was around 2014 that they decided that the government did not want to take cash on the London Transit anymore. And they just, they did the research, they did the public education, and they just moved in that direction. And I think it comes back to the point where we need to understand the roles that we all play as stakeholders, and I think that the government of Barbados has a huge role to play in our ability to move forward in a digital space.
And I'll just add one more on top of Allison's point, and to the first part of the statement around where to look. I would say look to the east, and not so much the US or North America or even Europe. Look at China. Look at Alipay, look at WeChat Pay. 700 million and 1 billion users each. And compare that to Google Pay with 50 million and maybe Apple Pay with 130 million. So look to the east and what the Chinese have been able to do in terms of faster payments and the ability to leverage technology again to leapfrog.
Excellent. So next question.
Yeah, good evening. Cornelius Bartlett, Carbar Business Solutions. Very intriguing discussion. Very, very intriguing. But there seems not to be any clear agreement between the traditional commercial banks and this new electronic currency. The person that intrigued me the most, though, and the statement that was made that really intrigued me the most, that I want some clarification on, was from Marla, Mr. Dukharan. When you said that the idea behind the electronic currency is to capture people that are unbanked. And you didn't define what you meant when you said unbanked, but if I use my common sense, it says that they're not involved in banking in the regular traditional banking system. Right, so my question to you is, because I understand money, I run a business, I understand money, I understand you either use your own money and pay for the services around that, or you borrow the money, and if it's high risk, high interest, low risk, low interest. I understand that. That's pretty straightforward, old school. What I don't understand is if a person is unbanked, what exactly is going to be backing the electronic transaction of this electronic currency? And maybe I'm missing something. Maybe everybody here is more educated, more intelligent than I am. But I really don't get if I, for example, I'm living in the woods, I'm cooking my food on wood, and I happen to have maybe a cell phone, and I want to buy something. I want to do a transaction with somebody in China, but I don't have a bank account. And I want to use the electronic currency. I don't have a bank account. I don't have any money in the bank. How am I going to do that transaction? What is it going to be backed by? Because I know traditionally, when you had gold, your money was backed by actual gold.
What is your money backed by today?
My money is backed by
in the wallet. What's your money in your wallet, in your back pocket? What is it backed by?
No, but you're missing what I'm asking. My money in my wallet is my money.
I understand what you're asking, but I just want to make a point in addition to what you're asking. What is your money backed by? Okay then. But you trust that your money is legal tender, the money in your wallet is legal tender.
That's what you mean.
And you can use it to pay for goods and services. And you trust it because the central bank issues it, and they have the legal right to do that. And it is you are obligated as a merchant to accept it in settlement of payment, right?
Right.
Legally, there is a framework that provides for that. Digital currency issued by a central bank is the same in terms of the legal underpinnings, right? It has the same status as physical notes and coins because it is legal tender as designated by the central bank and the laws around it. And that is what it is backed by.
I understand what you're missing. You're missing the question I'm asking.
I think what
I'm asking, just hold a minute.
No, I think I could sort of clarify when you get your salary can either go in the bank account and you can make a payment.
Precisely, is
so
originated
essentially
from
what
somewhere.
could happen is that your salary could go towards your digital currency account. And then
Your
you can
mobile
use
wallet.
that, or your
I
mobile
understand,
wallet, and you can make payments.
But I'm living in the world, and I'm unbanked.
Okay, so
You just
okay,
put,
no,
you just put your cash in your digital
I think you're confusing being unbanked with having access to a mobile wallet. Being unbanked, the definition of being unbanked means that you don't have a means to save and you don't have a means to transact without the use of cash.
Right.
Okay? If you have a mobile wallet, then essentially you are no longer unbanked because you have a means to save money in that mobile wallet and you have a means to transact using that mobile wallet. So you are not unbanked if you have a mobile wallet. What I was talking about was the people who are unbanked, and like Winston who keeps his money under the mattress, he's unbanked. And there are risks associated with that. It is a pillar of persistent poverty to be unbanked. And you cannot solve poverty and development challenges without financial inclusion, basically, which is why the World Bank set itself a goal, actually, of achieving universal financial inclusion by next year, which, of course, they're not going to meet. But that is how important financial inclusion is. And so your question is, if I have money in my wallet, my mobile wallet on my phone, what's backing that? And that, where is that value that I want to use to pay somebody? A digital currency issued by a central bank on a mobile wallet has the same value as the notes and coins that Winston has under his mattress or that you have in your wallet. And it's legally the same.
But how do you get it? In other words, you have it under the mattress.
So you would get, for example, when you get your cash, how do you make your money if you're living in the world? You sell goods and services, right? Right. So when you sell those goods and services, your wallet will be topped up.
Okay.
Yeah?
All right, got you. Thank you.
All right. So next question. Yes, please.
Hello, good night. My name is Kayla Hadley. I was listening carefully to the panel, making my notes. I'm sorry to divert because I have a couple other questions that's separate from the topic that was brought up, but mine is more from a regulatory perspective. I wanted to know, because I've been paying attention to the advancement of digital currencies worldwide, the treatment of it in the US, the EU, Asia generally, and I just wanted to know with respect to what Runako Brathwaite would have mentioned, certain issues such as consumer protection, data privacy. When you consider consumer protection, data privacy, and other issues, I want to know, how do you, especially pertaining to data privacy, when you're looking at something like estate planning or insolvency proceedings, right? I wanted to know, how do you navigate data privacy with rights of access? Because I'm seeing that it is an issue that's being wrestled with right now in certain countries where persons have digital assets, they die. There's no access to the key that people can, access and deal with their assets. And if larger, more developed countries are wrestling with those issues, I'm wondering what kind of plans do you have in mind, particularly that we can possibly wrestle with those issues now, so that when we are fully fledged in a digital, economy, that we are fully equipped to deal with these issues when they arise. So, in particular, is concerning with the insolvency part, because if a business, I guess, goes out of business, basically, and you have a whole bunch of creditors, and imagine the business has a large set of digital assets, and the only person who has the key is the director, and he dies. What happens to the creditors? So I just wanted to know, yeah, what's going to happen, or what's the...
That's why you should keep the money underneath your mattress. Runako, please.
That is a great question, and I unfortunately do not have the answer for that. Yeah, I really don't know. We're still looking into these things.
You have stumped the panel. I have a small announcement. Could the driver of XC904 please attend to your vehicle as soon as possible? So there's a question about charges on this digital currency platform.
On M-Money, the end user pays no fees.
Right, so the Cape Shepherd Card mobile app, it's actually designed to tailor to micro and small businesses. So it really doesn't have the level of cost structure that the traditional point of sale will have. There is what we call a processing fee, and that is very, very attractive. That's the feedback we've had from all of our existing mobile partners.
So.
Okay, and then there's also the send and receive feature that we have in the mobile app, which allows if Esan was a card holder, I'll be able to send funds to him as well, and that fee is very similar to the normal ABM fees that you have if you withdraw through Carifs or sorry. Oh, what are the rates? Oh, so $1.50 would be the transfer fee, which is the equivalent of when I go to FirstCaribbean and I use my Scotia card. So.
Oh wow! Look at
To pay transfers on M-Money is free, by the way.
Good question.
Okay, let's have another question after Marla has gone some free advertising. Yes, please.
Hi, good night, Crystal Howell. I'm a training facilitator for the Institute of Internal Auditors Barbados chapter and a member of ICAP's Communications Committee. The question I had was for Runako. We spoke a bit about cash, and in terms of the risks related to that, you can have it stolen from under your mattress. You have a credit card, you could have it hacked, and we've also discussed the controls that you could put in place to mitigate these risks. But I have some difficulty in understanding if a risk assessment has been performed for digital currencies so that we can identify not only the issue that the young lady raised, but what other risks would be present for a digital currency before it's adopted fully by regulators, so that we can understand what it is that we're facing, especially as auditors and accountants. How is it that we're going to be addressing these particular risks and making sure that the companies that we're dealing with have controls in place, especially if it's going to be used as a form of payroll, if you're going to be using it for employees to be able to, especially those who are unbanked, using that to pay persons. We have to understand what kind of controls are going to be in place, because nothing in this world is risk-free, not even the risk-free rate.
Right, great question. So when I spoke to digital currencies, I was really speaking to a digital fiat, which, as Marla said, would be issued by the central bank. And as I said, we are still doing this research. We need to fully understand these risks so that when people come with questions like that about estate planning and payroll and those kind of things, that we have the answers for you. But right now, we are still going through the process.
So maybe I could answer that question. There's a lot of research that has been done. Bank of England, for example, Bank of Canada, Monetary Authority of Singapore, and the IMF, the World Economic Forum, the Bank of International Settlement. They've all done a lot of research on the benefits as well as the risks. Just last week at the IMF meetings, we were involved in a discussion that helps them to understand what those risks are, the risks with respect to operationalizing central bank digital currency. And so they expect to put a paper out on that later this year. But if you look at the IMF's website and the Bank of International Settlement, you will see there are lots of risks that have been identified, and there are actually ways that you can mitigate those risks based on the design that you come up with for the central bank digital currency.
And let me just add to Marla's point that these risks will vary across different countries. So what may apply in the case of the IMF study, yes, we may have some of those risks applying here, but how those risks apply is what we need to understand in order to put controls in place.
Good. Next question. Okay.
Yeah.
One question at the back.
Good
Yes,
evening.
please.
I have used money as a means of saving money. And I went recently, 3 weeks ago, to a merchant and realized that they couldn't put any money on the account because apparently they didn't have any money, they said. I want to ask Marla, why would that happen?
I don't know. I can't speak to what that situation was with the merchant in question.
Yeah, maybe what you could do is maybe talk to Marla afterwards, or maybe contact Bitt a little bit later on. Yeah. Thanks so much. Next question. Yes, please.
Hi, good evening, panel. Excellent discussion. I have an opinion in terms of the Do I have to turn it on? No.
It should be working. It's working.
Oh, thank you. Yes, excellent discussion tonight. One of the points raised was, or one of the questions asked was in terms of the adoption of digital currencies. And in my humble opinion, where I've seen digital technologies being adopted on national scales, on wide scales, is primarily based on, one, the ease of use and the least risk. And then secondly, where it's been mandated either through regulation or a government says this is how we're going to move. We talk a lot about the US, and I like your point, Marla. Why don't we leapfrog what the US is doing, leapfrog what Europe is doing? But I find that in the US, a lot of the reasons why they haven't adopted some technologies is because they don't see a need to. So for example, we spoke about Sweden, where Sweden is a very, they don't use digital currencies, but yet still they're cashless. And that's because the technologies allow them to move money without having cash. The systems are in place. I see Barbados as having so many options. Mr. McConney mentioned about paying his kids, topping up his kid's phone. I do that with my bank account. I did my online banking. And I find that in Barbados, we have a lot of options, and we're getting a lot of options. So like even the Cape Shepherd app. I don't know of any other credit card that can do as many things as the Cape Shepherd card using the app. And somebody using that technology, how likely are they to move off to M-Money or to move off, go back to the bank for online banking, or even adopt a digital currency? So can you comment on what really are the factors that drive adoption of a digital currency?
Like I said earlier, I think that the countries where you have a high unbanked population and a high level of cash usage, they're the ones who I think are more likely to leapfrog and not go through the traditional development trajectory of going to electronic money and credit cards and debit cards and so on, and then eventually get to digital currency. I see those countries as the ones that are likely to leapfrog straight to digital currency. simply because the technology is already there and the need is there based on their high cash usage and their high level of having an unbanked population. So they're the ones I see leapfrogging. There's some of us in the Caribbean, even I would say Barbados is probably not the most obvious use environment in terms of the use cases being most compelling compared to Guyana, for example, where you have a huge hinterland, where you have no banking services out in the hinterland. A situation like the EC where you have several islands and you have the cost and the frictions of moving cash across all these islands. Even Bahamas has embarked on their own digital currency as well, and they have a specific problem there where they have so many islands, and a lot of these islands don't have any banking services accessible for the people living in those sometimes very small populations. So high cash usage, high unbanked population, and your specific conditions, I would say. All of those things contribute to whether or not it's compelling for you to get a digital currency.
So, Esan, do you also see that maybe the move towards a cashless society is being a very strategic move for the commercial banks rather than a move towards digital currency?
It depends. And just to piggyback on Marla's last point, it depends on the environment you're in. So certain countries within our region, it'll make better sense to look for a faster payment network than it would be to do digital cash. And by a faster payment network, I mean we can put the infrastructure in place, settlement networks and everything that I can send money to you and it gets there like that. Then the question will be, why do you need? Which is why I started out when I opened up by saying, you need to evaluate, do you need it? And is this the best? We can't go around looking for a problem to, solve. Let the solution evolve that way. So from the commercial bank's perspective, I would say we are, I wouldn't say ambivalent, but it'll come back down to, is it safe, is it secure, is it efficient? And let that be the driver.
Great. Next question.
On? Hello?
Yes, Luis.
Okay. Excellent discussion. Fantastic. And thank you to BIBA and the panelists. My question is twofold. There's been talk, and it almost seems that a bit of social responsibility is here with respect to moving towards a digital fiat. But who is going to bear the cost in this transition? That seems to be a question in my mind. There were some overtures earlier on about corporations being involved, but corporations get involved when they see profit. So when there was talk of J.P. Morgan and I can't remember the exact name of the companies, I think it was Alibaba, a few more, they realized that their engagement will somehow down the line lead to profit, which will lead to shareholder return. So the question is, my first question would be, who is going to bear the cost for this? My second question would be, and I'm in total agreement of this, is the involvement of the government. There were some comments by our Prime Minister the other day about the need for a national bank, and perhaps we can draw some parallels to this as well, where there's better control, and we can perhaps monitor and emphasize and support government intervention. So I guess my questions to the panel, whoever it may be, who do you envision would bear the cost for this, and at what point does the government get involved, how much to move towards a digital fiat?
Great question. I guess the cost will be burdened on the issuer of that digital fiat, which is central bank, of course. Where does the central bank get that money from? Most likely the government. So.
But what it would say here. Let me just turn it into a panelist as well too. We also need to think about the cost of printing money.
Printing money, exactly.
Printing money has a cost.
Securing it, moving it, transporting it.
As well as the coins, the coins as well.
Replacing it, yeah, so there will be savings.
So essentially,
There's going to be an additional cost.
Yeah.
Yes. There will be savings.
Yeah.
So essentially, every couple of months, it is, Runako, we have to destroy at the central bank. We have to destroy a certain amount of paper money because it really cannot be used again within the financial system. So what you would essentially be doing is maybe getting rid of that cost of replacement because you don't need to replace the digital dollar. Once it has been created by the central bank, there's no need for replacement because it has worn down. It can't wear down. It's just ones and zeros. So you get rid of that cost in the future. So if you look at it from that sort of long-term perspective, then you sort of reduce the cost attached to printing money from a central bank perspective. The other question, I'll leave the panelists to deal with.
What was the
Government intervention.
I think that the government is responsible for setting its long-term developmental goals. There is independence of the central bank from, there's supposed to be independence of the central bank from the government. And the central bank, of course, has a huge role to play in facilitating these development goals being achieved. And how they do that, I think, is within their remit. Now, going back to your question on digital currency and the cost, yes, there is an upfront cost to establishing a central bank issued digital currency, but over time, it's actually cheaper and the central bank earns more seigniorage via issuing a digital currency than they do physical notes and coins. Because these notes and coins, by the way, every time there is some innovation in terms of counterfeiting, all of these notes have to be redesigned with new security features, and so it's almost as though you have to run faster and faster just to stand still with respect to physical notes and coins. So that is a cost that is rising for central banks, and so a digital currency is a way to address that rising cost of printing, minting, if you will, securing, transporting, and destroying mutilated notes and replacing them as well.
So I'll let each of the panelists maybe have a couple final remarks, and then we'll close the panel for this evening. You can engage them afterwards.
All right, so very interesting discussion. I must say that just sitting here among the other panelists, I've learned a lot myself. The first thing in terms of closing, I think the Cape Shepherd Card mobile app is one solution that has been brought to the market because of demands in a particular sector, and then we are looking to expand because we see the opportunity to enhance the digital landscape of Barbados. That kind of thrust for us is not going to go anywhere. I think it is part of our future strategy, and I think it aligns well with the country. The ability to introduce options is always where the customer has the benefit. They get to choose, and I think that the question around just whether we go to a digital currency or whether we just embrace the alternates that are being presented is a very valid one, and we will, there must be a continued focus on education, shift in mindset that needs to happen if we're going to talk about trust. The products, I think I started with saying that the products just simply have to work. They have to build the confidence, the customer's confidence, and once we can get to the stage where that confidence is built within the products, you will start to see a shift. That naturally will result in less cash in the system, and maybe that's the balance that we're going for. And that's it.
In terms of wrapping up, just to build on Allison's last point, it's about options. So we've been discussing this evening digital currencies, but as we did the tour de force, you would have realized that that's not the only solution. We can look at faster payments, we can look at other alternatives to get what we want, which is a reduction in the friction, which is a more secure form of payment and a cheaper form of payment. What I would say is, as we look at if we want to go down the road of digital currencies, there are a lot of things that we haven't surfaced today, and there are a lot of things that we would need to consider. So in this discussion today, we haven't, for example, focused on identity. Identity is going to be one of the toughest problems to solve with a digital currency, because how do you know that the fiat belongs to me? Or how are you going to link that currency? I lost my phone, have I lost my wallet? So identity will need to be solved. The other thing that we will also need to focus on solving, as well as we look at digital currencies, is who holds the currency. Is it the central bank that will have accounts belonging to Marla, myself, and Runako? Or is it the banks that will have those accounts? And what does it mean if the central bank is now holding deposits? Then how can the banks lend? So those are some of the other things that we would have to look at and examine. So I would say, today is the start of us having a robust discussion about where does the future of money go in our societies, and the wider implications of what that means to how we lend, how we transact, how we live will need to be examined closely.
Thanks.
Yes, and in closing, I just want to echo the comments by Esan and Allison. The alternatives, as I mentioned in my opening remarks, the attractiveness of these alternatives are going to be important in determining whether or not to issue a digital fiat. It's also going to, public demand is also going to play a part. If there's no demand for it, then why would we want to expense ourselves in that case? And just a point on public demand, I just want to plug the central banks across the region are doing a survey, which you can find on Central Bank of Barbados website, on cash usage by consumers. So I encourage everyone to go to Central Bank website and complete the survey to help with the research as we go forward.
Thank you. I just wanted to point out, Esan, that a lot of the concerns you raised, all of that is already addressed, if not in the literature, but in the work that we've done, and Bahamas as well in the pilots. So a lot of these concerns are valid, but there are mitigants and solutions that are available to address them. Now, I, of course, am firmly of the view that
ladies. No doubt. Thank you. just a token of our appreciation for the good work that you've done. I'm now going to invite our second Vice President, Mr. Jamar Arthur Selman, just to give you a brief vote of thanks. Jamar. He told me he doesn't have many words.
All right. Good night, everyone. Thank you for coming out. Most of the people who have spoken here tonight have actually already done my job for me. He's thanked the panel. He's thanked you for coming out. So I am going to be, in the theme of the evening, I'm going to try to disrupt the traditional system of giving votes of thanks and try to get you to refreshments afterwards as quickly as possible. So just bear with me for quite literally 2 minutes, because there are, despite how quickly we want to leave, there are some people who really do deserve a special mention and a vote of thanks. So not to repeat myself, I just want to note that all of the panelists here, you've really taken time out of your very busy schedules and offer some amazing insights and opinions here tonight. So we really do want to give them one more round of applause. We had a lot of keen insights here tonight, including the impact of being unbanked and how financial inclusion can help eradicate poverty is something that a lot of us really didn't address our minds to, and I'm surely going forward, we really will be thinking about those persons who are unbanked and their part to play in this entire process. We've also learned about the benefits that micro and small businesses can have. Based on the discussion, we also learned that there are a lot of disruptors and other service offerings available. And we also learned that the banks are not going anywhere and they will not be obsolete. The next area I want to focus on really is to thank the persons who put events like this together. So a lot of this doesn't happen overnight. Each year there's several committee meetings, inputs and efforts from a great number of people. Therefore, I really want to thank Mr. Ricardo Knight, head of the Marketing and Communications Subcommittee, and his team who did an amazing job in coordinating this event. You can give them a round of applause. I'm not going to mention everyone by name, but a very special mention has to go to the International Business Week Steering Committee. We have a few members here. I see Lynette, I see Carmel, Derek, who chairs. It's a lot of time. It's a lot of time after work. It's a lot of time during work. So special round of applause for them as well. I want to thank our hosts, the Tom Adams Financial Center and the team at the Courtney, Blackman, Grande, Salle, everyone involved in the invitations, technical arrangements, stage setting, lighting, seats, catering afterwards. Everyone, thank you very much. One more. And to wrap it all up, you can't have these events without the persons who attend, but you also can't have it without the backing. So once again, I want to make special mention to Brookfield, who sponsored tonight's event. One more. And finally, a very quick mention to our IBW Week sponsors, premium sponsors Invest Barbados, the Central Bank of Barbados, SECO, Tricor, Seidel, PricewaterhouseCoopers, Deloitte, Clark Gittins Farmer, KPMG, Ernst & Young, and Alternatech. Once again, round of applause. And I hope someone was timing me because I hope that's 2 minutes. So ladies and gentlemen, thank you once again for attending, and I invite you to join us for refreshments outside.